Good evening, everyone. Welcome to CNBC Tonight. I'm Taimur Nabili. Thanks for joining us. We have been expecting today Indonesia to unveil its latest package of measures to try to restore confidence in the economy and prop up the ailing rupiah. But the announcement has not yet come. It's been delayed twice already. What we have heard is the government saying that it will raise fuel prices soon, and the central bank has also been saying it will hike interest rates again if the need arises. But more than that, we don't know as yet. CNBC's Maura Fogarty has been taking a look at the story. Maura, any news as to why the delay?
Well, Taimur, a government spokesman says that the government is placing final touches on the speech that President Susilo Bambang Yudhoyono will be giving when he announces these policy measures. However, early reports do suggest that the government had to hold back their announcement this morning because of disagreements over the size and the timing of a key feature in its package of measures to support the rupiah. That key measure, reducing the government's fuel subsidies. Meantime, Finance Minister Yusuf Anwar has confirmed today that there will be a new fuel subsidy policy announced soon. Indonesia imports large amounts of energy and then sells oil products domestically at below market prices. And record high oil prices have acted as a triple whammy on Indonesia, hurting its economy, currency, and budget. The government has slashed fuel subsidies already. It did so back in March. It hiked energy prices by about 29% on average. And earlier this week, President Susilo Bambang Yudhoyono did say that fuel subsidies could cost around 145 trillion rupiah this year. Last year, it drained about $7.5 billion out of the government's coffers. It's a very fine line the government is trying to walk. It doesn't want to provoke any civil unrest because there were protests, for example, back when they hiked their prices in March. And of course, everyone remembers the fuel hikes of 1999, which triggered widespread protests and ultimately helped to force President Suharto to resign. Now, the Indonesian government has also said that the measures will include energy, monetary, and fiscal policies as well. And the central bank, in addition, has not only raised interest rates, but as you said, Taimur, it has vowed to continue doing so if needed. Today in Jakarta, the market was broadly firmer, up by about 1%. Merrill Lynch, meantime, has raised its rating to market weight from underweight on that market, citing recent moves to shore up the rupiah. It also says that as rates are rising and fuel subsidies are expected to be cut, it presents a good trading opportunity for that market. This is probably the biggest economic test that President Yudhoyono has faced since taking office nearly a year ago, Taimur, and many say it is crucial that he restores investor confidence in the currency and in the economy.
All right, Maura. We've got with us now in the studio with me, Simon Littlewood, president of Asia Now, a consulting group. Simon, before we get into speculating about what the reaction might be, let's talk about how big the problem is. I mean, Maura's talking about restoring confidence and all this kind of thing, but Merrill Lynch is up there waiting. You probably heard a few moments ago we had Glenn Maguire saying, you know, no panic as yet. Why is it that all of a sudden Indonesia seems to be so vulnerable to something which most people seem to think has not really bitten anybody yet?
Well, Indonesia is more vulnerable than pretty well any other emerging economy to the fuel price issue. In emerging economies in general are more heavily dependent on fuel imports than others. And the problem with Indonesia is that they use a significantly higher proportion of gasoline and power generation than most other emerging economies, which makes them particularly vulnerable.
Absolutely. I mean, they have exposure, we know that, but is it critical?
Their underlying fundamentals aren't bad. I mean, they've got about 6% growth, and they're talking about higher growth next year. But clearly, they've run into significant problems recently, and the currency has behaved very badly. The market has gone down very significantly. The fact is that the government undertook in the early part of this year to make significant changes based on a reduction in fuel subsidies. It basically took about 29% off. It still sells gasoline at about 23 cents a litre. That's less than half the price that gasoline is traded at in Singapore, for example. It makes gasoline, I think, the third cheapest in the world after Saudi Arabia and Iran, both of which have very significant amounts of surplus gasoline. The problem is that SBY has not been able to fulfill any of the promises domestically that he made as a condition for taking the subsidies off.
I mean, everything I'm hearing from you is just confirmation of the same thing. I mean, there are a number of imbalances, there are a number of less than ideal situations, but nothing that is seriously worthy of the tag crisis. We had yesterday a little bit of a panic. The actions that they took appeared to have put a floor under the market and stabilize things to an extent. What more is necessary then? Why should they come up with another package?
Well, the government is bust in essence. I mean, they have massive issues in terms of the need to invest in infrastructure and of the need to attract foreign investment, and both of those are dependent to some extent on getting their budget right, and both of them are dependent to some extent on the fuel issue. I mean, you're right. I mean, the sad thing really about Indonesia is that SBY has really done everything right, but he's been the victim, like many governments in Southeast Asia, of this massive increase in crude oil prices. And Indonesia is particularly vulnerable. I mean, we've seen issues in Thailand and other geographies, but they haven't been anything like as problematic. The history in Indonesia, as you know, is that there's been great reluctance to remove fuel subsidies. This is a hugely politicized issue. The primary concern of any democratic government is to stay in power. The discussion at the moment, and probably why they're delaying this announcement, is, you know, it's a balance of risk. On the one hand, they can't afford not to remove the subsidies. On the other hand, if they remove them, you know, there is a serious risk of political unrest. Yeah.
Well, we've got SBY. I think he's already stood up to speak, and we're just getting some flashes through. He's just talking in generalities right now, talking about a serious need to support the rupiah and high fuel subsidies are threatening fiscal sustainability. We don't have any more detail than that right now. Simon, one final word on this issue then. Are you expecting him to come through with any significant new policy measures today in the middle of this speech?
Well, I think he'll reinforce the discussion around privatization. I think he'll talk about interest rates. I think he'll talk about allowing more hedging for fund managers, because clearly there's significant currency risks.
Right.
And he's got to come up with something on the fuel subsidy removal. That's going to be a very tricky one for him.
All right, Simon, we'll leave it at that. Thanks for coming by.
Okay.
Simon Littlewood, President of Asia now, joining us here in the studio. We'll take a short break. When we come back, we'll take a look at Wall Street. Stay with us.